Daryl Hudson, the wingman, delivering you guys that sauce. I'm delivering that sauce. Here we go. Let's go, baby. Yeah. You know, we always talk about here. I love when you guys come into my channel so we can talk about how to better ourselves as Americans. I mean, I know other people look at my channel, but most importantly, I like to, because I'm American, and like to inspire and motivate and help for everybody to increase their savings rate, to start investment portfolios and using their money to be beneficial not only for themselves but for their families. And hopefully you get to the point where you grow a portfolio of 400, 750, $1 million portfolio where you can use financial planners and wealth managers to help you along your journey, as you know, with taxes, and be able to retire hopefully before the age of 60. What we have here today is financial planning and dividend investment with my portfolio. This today we're going to talk about. I just dropped $5,000 into the market because I saw that the market has been dropping. It is Wednesday, May 24th, and I dropped $5,000 into the market. And I've been just sprinkling my dry dust here and there, like like mozzarella on a pizza, just sprinkling it. Woo! I'm doing it. Yes. And so, yeah. So I was at 45,000, and yeah, as you see, the market has been down, and I took advantage. And so here, just wanted to show first off the evidence of me dropping the $5,000. I dropped a little bag into the stock market to put it into work. Oh, so this just shows you right here that recently I bought $750 worth of Discover Discover card. So financial services, which is Discover Master, not Mastercard, the Discover card. And then right here it shows right here I dropped $5,000 on into the account on May 22nd, and since then, as you see right here, I decided to want to change up certain things. I wanted to. I saw that in my dividend portfolio, I was heavy on the consumer staples. Uh, Scratch that. I was heavy on the consumer discretionary stocks in my dividend growth portfolio, and so McDonald's is a dividend king, I believe, and I bought it because it increases a dividend by 10% last year or this year. And I'm not gonna lie, McDonald's really has done a lot of great things for me, but I wanted to change a lot of just my dividend investing style now. I'm still more so getting the dividends and buying Ultra Group Mo and buying Enbridge EMB, you know, that Canadian dividend stock. But I honestly I want more growth. I'm 34 years old and I want to retire by 50, and so I want my portfolio growth, even though it's a recession and it's, you know, bad times right now. But I want my portfolio to grow, and as part of one of my goals, I want to hit that 100K mark by the end of next year. So I want to get my dividend growth portfolio. I want to get it going, and so I'm at about, you know, overall for all my portfolios, I'm at about 73,000, and so I want to invest more some this year, and I also want to go heavy next year with investing roughly $1,000 just in my taxable account alone, and then invest in my 401k and et cetera. Because I really want as a goal to hit that 100K, because like Warren Buffett and Charlie Munger, it is hard to hit that 100K, but once you hit it, it's a lot easier in terms of compound interest. And so right here, I didn't have Apple in my growth portfolio. Smack my hand. I know. I got smack my hand. I know. Punish me. Punish me. And I fought against it, but I need Apple in my dividend growth portfolio. And so I bought Apple I bought like roughly 700. I bought roughly $1,250 worth of Apple. As you see right here, I bought like $550 worth of Discover Financial Services initially, and then today, I set it at a price because I wanted to get it at $100 because it's been hovering around 102. And then right here it shows that I sold out of Microsoft, and I bought some SCHD. I bought roughly $300 worth of SCHD. I bought roughly like $260 worth of Snap On. I bought $550 worth of no, actually that's $600. I bought $600 worth of Starbucks because I love Starbucks. I bought roughly $300. I lie. No, I bought roughly $340 worth of Texas Instruments because I wanted to get 2 shares of Texas Instruments. I got roughly $600 worth of Texas Roadhouse because that is I've been rocking with Texas Roadhouse like a growth stock, and they also buy stock buybacks at Texas Roadhouse, and and then yesterday I bought show you I had bought another $844 worth of Apple, and then right here it just shows that the dividend that I'm receiving from enterprise products is starting to try to process still, and then yeah, and so this video wasn't about the dividends that I've gotten yada yada yada. This was just to show you that hey, I dumped $5,000 into the stock market, and I also sold out of my McDonald's position, and I bought all those different stocks, and so that what it did to my dividend growth portfolio is that it shows you right here that um, I am it showed you that I was at 45,000. I was at 45,000, but the change was $4,223 because the market is different. So just wanted to show you that I was at 45,000 because people be like, you didn't put 5,000. I did. It's just the market is down. So but yeah, so we'll be buying those $5,000 worth of stocks. It put me at my dividend portfolio at a 3.43% dividend yield, of a yield on cost of 3.59 and an annual income of $1,526. And the reason why it's so low compared to putting 5,000 is that a lot of the stocks that I bought had low yields because I told you I wanted to change up my dividend portfolio strategy where I want more low yields, but it's going to increase more so in stock price appreciation. But then also they increase their dividends on the higher end, on the higher end. So they increased their dividends like 10%, 15%. So like Texas Roadhouse increased like their dividend like 10%, 15%. Apple really doesn't increase their dividends that high, but they do a lot more so stock buybacks, and so the stock appreciates a lot. And so me buying more of that, me buying more of Microsoft, a lot of my tech companies generally have lower yields. But then with that, and then I also bought Discover Financial Services because it has a 2.82% dividend yield, and so that helps to try to counter a little bit the lower yield. But the Discover Finance also increases its dividend for like more than 10% the last 3 to 4 years, and so this was my strategy were to buy more so of the lower yields in my portfolio of the Starbucks of the world, the Texas Instruments, the Texas Roadhouse, to try to get more so stock appreciation, companies that really value giving doing stock buybacks to ultimately help me in what I'm trying to do, right? And so, lastly, I still really help my diversification of my portfolio. And what I like to go over is what I go over in my next video is how much dividends that I made in the month of May. I'll go over that in my next video because it's still May 24th right now. I still receiving more dividends, but with the buys, you know that I'm at $1,529 for the year, and so this is how it breaks out. So my highest month is 169, which you see, it's those, and then my lowest is 99, which is like this month, like May, August, and November. And so in my next buy in July, I plan on buying another 2,500 stocks, and with those, it should be able to help increase that dividend yields of those months of the May, the August, and the November. Because I plan on dumping about another 2,500 into the market around July, and then your boy just got a new job as well. So I got a new job. I start on June 1st, and so I'll be dumping some more money into the month those in the month of July for APD, AVI, most definitely EPD. I'm gonna buy some more Apple, and I plan on buying some more Starbucks. So this $10.23 should go up to about from $10 to $14. So be on the lookout for most definitely a couple months now when I buy the $2,500 worth of stocks in July. But then also be on the lookout for my next video of how much dividends I've made in for May. And so hopefully you guys enjoy my video. Lastly, here's the diversification of my dividend portfolio, because I would like to still stay highly diversified amongst my dividend portfolio as I grow it, because I want to use this portfolio to live off of. So currently I have 31 holdings, and I'm going to rock and ride with these 31 holdings as I'm completely diversified. I still need two more sectors that I need to get into, which is the communications services sector, like Verizon and AT&T, and then there's one more that I'm missing. It's one more that I'm missing, and once I figure that one out, I'll begin to start investing in that one as well. And so my highest paying company is Mo. My lowest paid company in terms of dividends is MPW, which is a semiconductor stock. So hopefully you guys enjoyed this video. Hopefully you guys enjoyed this video. And this is what I'll be dumping $5,000 into the market, and what it got me. And the market is down, and hey, I love it. When the market is down, when it's red, I buy. When it's green, I ride. Hey, I didn't make that up, but I'm getting it. So make sure you look to the right side for another video, and make sure you look like, subscribe to my channel. Click on this video right here and learn more about dividend investing in general, and how to make money in the stock market. Get money with your boy, Kadero Hudson, the wingman, giving you guys that sauce. Ooh.